to our 271st weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. Now, the way this call works is it's similar to an AMA on Reddit. Ask me anything. You can ask me business questions, career questions, any questions you want to. My humble goal is to help you take your career, your business, your portfolio, etc., to the next level. So before we begin, a couple of housekeeping announcements, special announcement. So next week on my 272nd weekly webcast, I'm going to be interviewing the #1 professor at Stanford University's Graduate School of Business. He's the top venture capital professor there. His name here is Ilya Strebulev. Great guy. And he just published a book, actually, where Eric Schmidt, the former CEO of Google, I think wrote the introduction for. He's been a tenured professor at Stanford's Graduate School of Business for many, many years. Great guy. You can ask him questions about venture capital as well. I don't think there's anybody on the planet that knows more about VC than Ilya does. And he's a really good guy as well. Second thing I want to mention, speaking of books, McGraw-Hill just published my book. I've been working on this for 2 years. You can order it right now. I think it probably comes out next week. This is an advanced copy. You can go to Amazon. It's called Finance Essentials for Managers: The Tools You Need to Succeed as a Non-Financial Professional. And there's tons of templates you can download from this book as well. And I teach you everything in 300 pages about accounting, finance, investing from scratch. There's a lot to it. So again, it's called Finance Essentials. I think you can get it on Amazon and other places as well. The last housekeeping announcement I want to make is that our 9th Gold and Platinum MBA degree program starts on Monday, May the 6th. Classes are going to be every Monday and Tuesday from 9 a.m. until noon for 1 year. If you want to learn more, you can go to day1notoneday.com, as you can see in the bottom there, and then just scroll down to learn more about it. Yeah. All right, let me get to your questions. All right. Okay, first up here, I've got Ranveer from Mauritius. Great to see you. You wrote, how certain are you feeling today? Yeah, I know that what you're doing there. You're making a little reference to the TV show Billions with Dollar Bill. Whenever Bobby Axelrod asks him, how certain are you about this investment? And Dollar Bill would always say, I'm not uncertain. Thank you for that. All right, and then Ranveer wrote, I was wondering if you have a template one can use when applying for contracts. I wanted to use that to apply for jobs on Upwork. Nothing specific like that, but in the MBA degree program, I think you're in my Silver MBA program, I've got 12 templates, depending on which job you're interviewing for. You could probably customize one of these if you want to. What I also recommend doing, though, is using Microsoft Excel or Google Sheets to do it. And all you have to do is set it up once, invoicing process once, and then you just change the name of the company and the date. That's it. It's pretty easy. Or what you can do is, in the MBA program, there's a ton of electives. I have a lot of new ones each year, including a real estate one coming soon. What you can do is you can go to all my courses, okay, which is learn.harounventures.com. And these are the free electives that you get in the MBA program. One of them is Excel. And here I'll teach you exactly how to create every type of template you can possibly think of in Excel. In that course, which is free for my MBA students, I also teach you every single function, that's right, every button, every icon, every menu item. I also teach you how to program from scratch in it as well. Okay. All right. Next up, Anurag, how are you? Good to see you. You wrote, hey, Chris, if one is learning a new skill like financial modeling, should they learn the old way through Excel? Am I dating myself? Or do it manually, or learn the new way through leveraging AI tools? Yeah, I would still use Excel. Excel has a ton of features you cannot use yet in Google Sheets. So what I would do is I would build your financial model in Excel. In my MBA program, I provide you with all the templates and tools you need for all finance situations, whether it's modeling, valuation, etc. Then what you can do if you want to share a document that's made in Excel is you can open it in Google Sheets and then share it from there. Now, when you open it in Google Sheets, not everything works. Obviously, Visual Basic for applications, coding, doesn't transfer over to Google Sheets, but I'd still start with that. Now, if you want to take your game to the next level, your Excel game to the next level, you can also use Python, which I teach as well. I have a Python elective at the same location I showed you a second ago. And in that Python elective, I also teach you how to use Python within Excel using something called data frames. Okay. Next question's from JM. Wrote, Starbucks has negative shareholders' equity. Yeah, it's not that common, but it is with restaurant companies. Same thing with McDonald's and Papa John, negative shareholder equity. Does this mean their liabilities are greater than their assets? Is this an investment concern? How should I interpret this in my analysis? It is a concern, and quite often it means that they've issued a little bit too much debt. I think it was back in 2018, Starbucks had like $5 billion in debt. I think it's closer to $20 billion now. Also, if a dividend is much bigger than earnings, that could happen as well. In the case with McDonald's and Papa John, because they franchise. What this could also mean is they're selling off franchises. The best way to learn about this together in real time is let's go to sec.gov, where we do all of our research on financial statements. So we go to sec.gov, and by law in the United States, you have to file all of your quarterly, annual, and 8K, meaning press releases here. So what we'll do is we'll type in here SBUX, okay? And then what we'll do is let's go to the current report, the most current earnings report, which is an 8K. And what I'll do is I'll search for retained, actually I'll search for equity in here. Give me 1 second. Oh, we got to click here to go in the press release first. That's right. Okay. Equity. Okay, here we go. All right, so here is the balance sheet. And here we see, you are correct, that liabilities are greater than assets. So the way that a balance sheet works, and I love to use props, is your assets is what you have in your possession, like a car, okay? That's one side. This is why it's called a balance sheet. Then on the other side of the balance sheet here, let me go back into big mode, and then we'll come back to this, this statement in a second. So on a balance sheet, you have assets on one side, okay? So this asset is my car. This is my asset. So who owns this asset? Well, it's either owned by me, that's James Bond, or a bank, right? And so assets has to equal liabilities plus equity. For example, if this $100,000 car here, if I've only paid for half of it, that's me, then I have equity in that car of $50,000, and a bank has a liability I owe to them of $50,000. So assets of $100,000 equals my equity. Equity means ownership of $50,000 plus the $50,000 that the bank owns, maybe the bank of Toyota or whatever in that. Let's go back very quickly, and I'll wrap up this question to sec.gov for Starbucks. Yeah. So it looks like here, the reason that shareholders' equity is negative is right here. You've got retained deficit. Yes, this means they've lost a lot of money. Could also mean, and I have to look through their financial statements in more detail, it would also mean that perhaps they paid out a massive dividend as well. Now, if you're ever confused about a line item, okay, that's on the financial statements, what you can do is you can go to the 10K, which is the annual report, or the 10Q, and then you can read what are called the footnotes, which explain any funky accounting that is hard to understand when you first look at it. Yeah. And if you have follow-up questions on that, please let me know. And thank you. Okay. Haroun, great to see you. Okay. And then next up, we've got MS wrote, hi, Chris. Hey, how long ago did you work at Goldman Sachs? Oh, I am old. So I worked there from 1998 until 2002, so 5 years. Yeah. And those hedge funds, yeah. So hedge funds, so I left Goldman in 2003, and I worked in the hedge fund industry from 2004 up until 12 or 13-ish, yeah. And I say 12, 13-ish because what I did was I eventually worked in venture capital at a hybrid fund. We did hedge funds, then we morphed into venture capital only, yeah. And I've been teaching since 2016 full-time. I quit venture capital in 2016 to do what I love doing, which is teaching. And thank you, Tony Robbins, for convincing me. Yeah. And Tony Robbins, I met him. He looked to invest in one of our portfolio companies here in the Bay Area. Great guy. And he convinced me to do this. And I love him for it. And by the way, if you guys want to turn your life around, or at least follow your passion in life and be happier, don't take my courses. Take the Tony Robbins Unleash the Power Within course. Okay, it's UPW. Don't do it online. If you can, go in person, please. It's a 4-day event, and it will change your life. And at that 4-day event, Tony will help you a lot with goal setting, massively increase your confidence, and give you clarity and purpose in terms of what you want to do next in your life. Now, when I went to that Tony Robbins event, it was in November of 2015. And one of my clients who worked at JP Morgan, one of the investors in my venture capital firm, a guy named Michael Bressler, who I love, he had an extra ticket to a Tony Robbins event, so he invited me. And so I went down to LA to attend it. I think it was at the Staples Center. And during that event, it was 4 days. And on the very last day before we left, Tony Robbins made us all write down one goal and set a deadline date. And it has to be a goal that, and obviously it has to do with this, I'll tell you in a second, but it has to be something you've been putting off. And he explained to us that if you don't set a deadline date for your goals, you'll never get them done. And that's why most people give up on their New Year's resolutions by the third week of January. They don't set a deadline date. So my goal was this. I had been writing this book for years, and every time I met with my family, friends, etc., they would say, "How's your book going?" And it got annoying after a while because I was putting pressure on myself to get it done. So I set a goal of I will finish this book within 2 weeks. Okay, and that was in November 2015. That was on a Sunday night. I left LA, came back to San Francisco. Monday morning, I went to work. I was at work for about an hour, and I said, "Guys, I'm just not feeling it." My two partners, my venture capital fund, they were great. And they were like, "Okay, Chris, take some time off. That's cool." I went home and I wrote all day and all night for 2 or 3 days. And I published the book by that Wednesday or Thursday. And it didn't feel like work. It felt like passion for me. And then I'm humbled to say that Forbes magazine wrote an article right after I published it. You can search for this, calling this book one of 6 books all entrepreneurs need to read right now, along with a book by Peter Thiel, Simon Sinek, Stephen Covey, and others. But the reason I got it done was because I set a deadline date. And as Elon Musk once said, if you set a deadline date of 3 years, you'll get it done in 3 years. But if you set a deadline date of 3 days, you'll get it done in 3 days. So number 1, set a deadline date for all your goals. Number 2, vocalize your goals. Tell your friends and family about it as well. And whatever, I take it to the next level though, because in my MBA degree program, on the very first day, I give you this. And this is a special scheduling methodology, a system I developed for you. And it's available in paper format, which is my preferred way. I like writing down my goals. It's also available in Outlook format, as well as many other file formats. And what I do, and what I recommend my students do, and again, I hand this out in the very first class orientation for my MBA program. You write out your schedule the night before. Okay, every night you write it out the night before for the next day. Then what you do, that's a scam phone call, sorry. Then what you do is you put it in your pocket and you keep it with you the entire next day. And when you write down your schedule for the next day, you schedule things like your meals as well as exercise and many other micro goals. And at the top here, you write your long-term goals, like your North Star goal. And always put in bracket when you're going to accomplish it by. Okay. Then at the end of each day, before you make tomorrow's schedule, you score yourself. And it's very subjective. Like you take off, say, 5% if, I don't know, you didn't say prayers, if that's important to you. Or take off 10% if you didn't get 7 or 8 hours of sleep. Or take off 20% if you didn't exercise. You do have time to exercise. If you want to get something done, give it to a busy person. And that's why when we go on vacation, for some reason, we don't even have time to exercise. Write down your goals, always. Yeah. Okay. All right. Next up, Burke wrote, "Hey, Chris, hey. When writing a business plan for a startup that has no revenue currently, how should we prepare and forecast a financial statement?" Yeah. So what I would do, and in my MBA program, I have a venture capital boot camp in the 3rd semester, where I teach you how to write a business plan and create financial statements as well. But what I would do for a company that's pre-revenue is I would look at the size of the total addressable market, TAM. Then I would calculate what % of that total addressable market do you think you're going to get longer term. And the way to find the total addressable market for any company, and don't ever invest in a company, by the way, without looking at the TAM first, total addressable market, because you want to invest in a company that's in a massive market. But the way to find the TAM or total addressable market for any sector is you do a search, you Google, the total addressable market for whatever sector it is you're looking at. And quite often, really good consulting firms like McKinsey, Boston Consulting Group, et cetera, they'll publish free reports. And these free reports will tell you the size of the market. And it's really important because I remember I partnered with Kleiner Perkins, a big venture capital firm when I worked in VC here in the Bay Area. And a buddy of mine that worked there, he told me their criteria for investing is quite often they will never invest in a company that doesn't have a TAM, meaning total addressable market, of at least $20 billion. And the reason why is because in the unlikely event that the company they invested in gets a 5% market share of that $20 billion TAM, then that's $1 billion in revenue per year, which is very, very hard to do. Now, if you're having problems coming up with the total addressable market size, what you can do is go to the annual report, meaning the 10K, of the top 25 companies in that sector and add up the revenue in a given year for all 25 companies. And that's a good enough proxy for the size of the total addressable market, especially in the tech sector where like 5 or 6 companies tend to dominate. And if you have follow-up questions about that, please let me know. But you want to think about what percent of the TAM you can get longer term. What you can also do, depending on what kind of a startup you have, is you can model the average selling price of your product times the volume over time. So if you're selling a hardware product, it's going to be number of units times the ASP, average selling price. If it's a subscription-based software company, then it's a number of subs, meaning subscribers, times the average price they pay per month. And you also want to incorporate what's called churn, meaning turnover as well. And I can go into more details on that if you want me to. Thank you. Okay. All right. And if you have questions about how to forecast expenses, not just revenue, please let me know. Thanks. Always look at similar companies, though. All right. Andre, how are you? Good to see you. And then JM wrote, following up on my negative shareholders equity question, what is the most common in the restaurant industry? Yeah, I'd say more often than not, you don't have negative equity. It's a special situation we're seeing right now with just a handful of restaurant companies, right? So Starbucks, for example, Papa John, as well as McDonald's, ticker MCD, have had negative shareholder equity. Yeah. It's usually a temporary thing. Yeah. All right, next question is from JM, who wrote, does the Gold MBA have the same content as Silver? Yes, it does, but I teach Gold live. Let me explain how that works. Okay, so if we go over here, and let me go to day1notoneday.com, which is forwards this page here. So these three have the same content, Silver, Gold, Platinum, okay? And there's now a 12-month payment plans that just added for Silver as well. So they all have the same content, except Silver, you just watch it like it's Netflix whenever you want, start today. Gold and Platinum have the same content, but I teach it live. And the way I do it is I use Wirecast, this product here. And what I'll do is I will teach 3 lessons per day, every Monday and Tuesday for a year. So I'll play a lecture, and then I'll take endless Zoom questions or YouTube chat questions as well. That's Gold. Okay. Platinum is the same thing, except you also get 3 hours of one-on-one meetings with me throughout the year. And that's every Monday, Tuesday, and Thursday between 1:30 p.m. and 3:30 p.m. Those are 20-minute slots. And it's confidential consulting. I help you with any issue you have in your business, your career, help you get a raise, promotion, etc. And as with all my products, there's a 30-day 100% money-back guarantee. And I always tell my students this. If you're not getting at least a 10 times return on your investment in the first 30 days, please ask for your money back. And then there's the Diamond Growth Program, which is much, much more than all this stuff. There's 20 hours of one-on-one consulting with me, including on Saturdays if you want to do it in that day as well. And if you want to learn more about this, it's not a good fit for everybody. You can book a call here and we'll set up an interview to see if it works for you. Yeah. Okay. All right, next up, Renvir wrote, if your hedge fund was down 30% and investors gave you 3 months to recover, what would you do? Oh boy, yeah. So you're going to love my vlog that I'm publishing tomorrow morning at 9 a.m. Pacific time because it's all about day trading and why day trading does not work. And it's my weekly vlog where I analyze an episode of Billions. Billions has about 70 episodes, actually more than that. And I am going to be analyzing every single one. I'm halfway through season 2 now. But day trading does not work. And I explain why in a lot of detail. I also explain my investment methodology in a lot of detail in that vlog that's going to drop tomorrow. Now, the reason I brought up Billions in that episode, which is season 2, episode 5, is because Bobby Axelrod is down, who owns the fictitious hedge fund Axe Capital. He's down on the quarter, and he has 3 days left to try to make money. And he puts tremendous pressure on his analysts to try to make money in 3 days, and nobody can do it. And there's a reason why nobody can do it, because you can't day trade. It's impossible. You can't will it within 3 days or even 3 months for that matter. So what he does is he tries to short the Nigerian naira, it's our currency, and try to make it float. And he tries to pull off what George Soros did years ago. So George Soros, and I have a vlog on this, made $1 billion in one day by shorting the Bank of England, meaning the pound sterling. And he forced the Bank of England to float their currency. It used to be fixed, pegged to a bunch of currencies. Now it's floating. Okay, and he did the same thing with the Thai baht in Thailand in 1997, and he made a fortune doing that. And he also made over $1 billion in 2013, 2014, George Soros, that is, by shorting the yen. So you can make a killing doing it with currencies, but you need a lot of money. You have to partner with others. Yeah, but day trading does not work. Yeah, it's hard. It's hard. And every investor and every hedge fund has a down month and a down quarter. It is what it is. And if they don't, they're cooking the books. Yeah. Or trading on insider information. Yeah. Always think long-term. And I teach you that in my MBA degree program too. I give you just a ton of tools and templates so that you can become a better long-term investor. I'll show you one of the templates I provide you with. So here's one right here. Let me go right here. Hold on a second here. Yeah. So one of the many templates I provide you with is something I developed that kind of, it's kind of a summary of all ways to invest in private and public companies. But this is a template. It's got 100 steps. And I give this to all my MBA degree program students per the link you see below, day1notOneday.com. And so whenever you analyze a company, you look at qualitative inputs right here. Then you look at quantitative inputs as well, like the total addressable market, something we talked about a minute or two ago. And all this will feed directly into your financial model, okay? And within your financial model, you start by forecasting revenue, which is a question we had earlier. Then you forecast your income statement, then your balance sheet, yada, yada, yada. Then over here, you value the company on 3 different valuation methodologies: price to earnings, price to revenue, DCF, to get your target price. And of course, you do a sensitivity analysis and you look at auditor-related stuff. And the last step you look at, or step 99, is technical analysis. Now, once you do all this, and what I do in this spreadsheet is I ask you 730 questions that you enter here. What's created automatically for you is a one-page executive summary, and this is just dummy data here. And that one pager looks like this. It analyzes fundamentals, valuation, and distant third is technical analysis. Looks like this here. And you can print this out and put it on the back of your resume if you go to interviews. What also comes out of this, and I'm trying to help my students work smarter, not harder. That's the whole purpose of my MBA program. What also comes out of this is a massive dashboard based on these 730 answers you entered in. And the dashboard will visualize everything about the company, including bill of materials if they make a physical product. And the last thing that comes out of this, the most important thing here, is a detailed 100 to 150 page report. Again, this is included in my MBA degree program. I provide you with a lot of tools and templates so you can work smarter and not harder. Okay. All right. And then Pishkaman wrote, "Hey Haroun, how are you? Hope your day has been going well so far. Likewise. May I know what you think about the CFA and data science skills? I'm a level 3 candidate as of now. Thanks." Yeah. Good for you. CFA is excellent. It's a better designation to get than a traditional MBA, because the CFA, it stands for Certified Financial Analyst designation. And basically what you do is you write one exam each year for 3 years, right? And if you're going to do it, and basically level 1, you're doing level 3 now. That's awesome, because level 2 is the hardest one. But level 1 is basically a review of the finance and accounting stuff they teach in most business schools. Level 2 and 3 take you to the next level. But if people out there want to take the CFA, it's a great designation to have. What you can do is do a search for Schweizer CFA books. And don't worry about the spelling, because Google will correct your spelling. I can't spell it for the life of me. But the Schweizer books you can buy used on eBay. And it's basically a small number of books that summarizes the $1,000 of textbooks that the CFA Institute tells you to read. You can buy it for like 30 bucks used. And then you take the exam. I think it's a great designation to have. Now, let me pivot and talk about data science. I think that's a fantastic designation to have as well. I prefer that my students study data science and not programming as much. And the reason I say that is because if you want to become a hardcore developer, it's a great skill to have. But I do believe that in the long run, AI is going to do that entirely for us. But data science is a great thing to learn, especially when it comes to statistics for analyzing, standard deviation, volatility, etc., especially when it comes to investing. I absolutely love it. And I teach statistics as well in my many electives, my MBA degree program, which comes in handy when you're looking at valuing options. Now, my son, Andrew, he's going to his third year at Berkeley. He started out in engineering. He switched out, and he's actually going to be studying data science. Yeah. And finance, too. He loves those two things. That's a killer combination, in my humble opinion. Make sure you enjoy it, though, because if you don't, then you won't do well. You have to be passionate about it. Yeah. All right. Next up, Eduardo wrote, "Hola again, Chris. Good to see you." You wrote, "I've been thinking about what you said to me last Q&A, and I'm ready to take the Silver MBA and watch all the topics, and it fits me perfectly. Now I will put a date on that. Thank you. You're most welcome, and thank you very much for your commitment. I appreciate that." Yeah. And when you guys purchase products from me, my goal is to build 1,000 schools in Africa. And each school costs me $100,000. So we're working on our second one now, and we're actually mapping out our third and fourth. So I'll show you. And I don't have a charity register my name. I don't do that. I just give the money to Vital, who's one of my students. So let me show you a little bit about it. Let's go here to About, and I'll go to Project Magoo. Yeah. So Vital was one of my students in my Platinum program, MBA program. Actually, he took one of my Udemy courses. I met him at a Udemy event in Berlin in 2019. And so we built this school in his hometown in Magoo. It's solar powered and all that stuff. And I brought my son Matthew actually there last summer, and that's what it looks like on the inside. So we finished this one. We're working now on Kenya, and the one in Kenya is it's a 6-hour drive from the Nairobi airport, and it's going to be a school for girls in honor of one of my other students named Marin Koros. It's going to be called the Leah Koros Memorial School for Girls in honor of her mother, who's so proud of her. Okay. Next up, I've got Zippo Nivuk wrote, "Good day, sir. Great to see you. Thank you." Devon wrote, "Hey, Chris, how are you? God bless you. Lots of happiness and more success in your life. God bless you way more." And as I do with every day, before I get out of bed, I always thank God for 10 things in this order. Andrew, Matthew, Dylan, my wife, Christine, my mom, my dad, my brother, Jamie, my sisters, Katie and Elizabeth, and all of you, my students. Practice gratitude before you get out of bed every single day. Just be grateful for 10 things, and you'll get out of bed in peak mental state as well. Yeah. Okay. Next question is, "Hey, Chris, are you also into crypto?" Yeah. I've owned 4 cryptos for a long time, and I've always publicly disclosed what they are. Okay, and always do your own research. Those 4 cryptos are Bitcoin, Litecoin, Ripple, and Ethereum as well. By far, my biggest position of those 4 is in Bitcoin. I own a lot of it in an IRA I set up many, many years ago. I started transacting in Bitcoin back in 2013. Yeah, so I'm a long-term shareholder when it comes to cryptocurrencies. And one of the reasons why cryptos have run up a lot recently is because of the halving process, as well as the inclusion of Bitcoins in ETFs, which was blessed by the SEC. Now, halving, I'll explain it very quickly. So every 4 years, since 2012, every 4 years, the reward for miners for mining Bitcoin gets cut in half. And it's done as a way to kind of control inflation. And every time we've had a halving process, there's been 4 of them, Bitcoin has run up a lot into that as well. Right. And one of the great things about Bitcoin is that the supply will only be 21 million Bitcoins mathematically by the year 2140. Unlike with fiat currency, where the United States government has increased the amount of dollars out there by about 40% over the past couple of years. Yeah. But always do your own research when you look at cryptos. But the other thing, which I think is a bigger catalyst than the halving, is the inclusion of cryptocurrencies now in ETFs. This is a big deal. Why is this a big deal? Because for those of you that have bought cryptos before using a secure a cold storage wallet like a Ledger Nano, it's so painful using these things to buy cryptos and store them in, because you have to enter in like 12 or 13 different passwords. And let's say you want to buy $100 worth of Bitcoin. At the last second after you configure this device, you're like, dude, I'm so confused. Screw that. I'm only going to buy $50 worth. You cut your order in half. Now, however, this has changed. It's changed because the SEC a couple months ago said you're allowed now to make ETFs that include cryptocurrencies. And that's a huge deal because you can buy with more confidence now, as long as you buy cryptocurrency-based ETFs after you do your research from a very reputable firm, very reputable ETF firm. And the precedent for why this is such a big catalyst for me is GLD. Okay, this is fake. But the gold ETF, ticker GLD, was released in 2004. And I got really excited about it. And I bought lots of gold then. And gold was my biggest position in my portfolio, my hedge fund in 2008. And the reason why that got me really excited about gold then was because now I could buy gold, ticker GLD, and know that it's real. And I could sell it quickly if I want to. Before then, you had to go downtown to buy gold bars, and you're not really sure if they're real. Then you're worried about, God, where do I store these things, etc. And so anyway, that's why I think that the ETF for cryptocurrencies is a massive positive catalyst. Now, it's fascinating because back in 2012, institutional ownership of Bitcoin or cryptocurrencies was basically zero. It was all retail. Now it's over 50%. That's a huge deal. And as with any asset class, you always want to look at demand versus supply. And that's why my grandfather, God bless you, I miss you, used to say to me, Chrissy, buy land. They're not making it anymore. Lastly, I'm publishing my comprehensive real estate elective exclusively on my MBA degree program this fall. Anybody that signs up for my MBA degree program or will sign up or has signed up will get it for free. And for those of you already in my MBA programs, always go to the last lecture of your curriculum to get access to the many electives. Okay. Now, when it comes to risk management in your ownership of cryptocurrencies, I believe that more than 95% of cryptocurrencies are a scam. I really do. And I don't recommend that anybody have more than 5% of your liquid net worth in cryptocurrencies. Also, I don't recommend having more than 0.5% of your liquid net worth in any one crypto. Yeah. And day trading doesn't work. I can go there if you want me to. All right, next up, Renvir wrote, why can't more people replicate what Soros did back in those days, meaning when he made $1 billion shorting the British pound? Yeah. It's hard. You need a coordinated attack, right? And I shouldn't use the word attack, but Soros is hated in Thailand as well as Malaysia for what he did. You have to partner with many other hedge funds, right? You can't go it alone. Like you have to use like usually between $5 and $10 billion to be able to do this. And the reason is because you need enough money to be able to force a central bank or a Federal Reserve of a country, for example, to take their currency, which is fixed or pegged to the US dollar, for example, and float it, right? You need a lot of money to be able to do that. You have to short tons and tons of money. Yeah. All right. Next up, Devon wrote, some companies are trading at more than 100 times earnings. What is the thing we should look into before shorting, please? Yeah. So what I would do if you're interested in shorting a company, and be careful, please, because you can lose an unlimited amount of money. And I'll give you a worst case example. Back in January of 2021, too many people were short GameStop. And as a result, people covered their shorts and GameStop went up literally 29.4 times in the month of January of 2021 alone. Deadly. Maybe think about buying puts instead. Because if you buy a put, you also make money if the stock goes down that the put is based on. But the most you can lose is this. If you short a stock, you can lose an unlimited amount of money. And according to people familiar with the matter, me and the media, apparently, I can't confirm this of course, but Michael Jordan even lost $500 million in that short. Yeah. But if you're going to look to short a company, I would use the same methodology, which is this template here I mentioned earlier, which is available to my MBA students for free, to come up with a target price, okay, that obviously is way, way lower than where the stock is right now. And if you're going to short positions, make sure it's a tiny percent of your portfolio, given the unlimited losses you can possibly get. Yeah. Now, when it comes to valuation, be careful about shorting stocks that are expensive. You got to do a lot more research than that, because what might seem expensive to you might be very cheap to other investors. Now, if you're a long-term focused investor, which I humbly think everybody should be, then a company that looks expensive, that's trading at 100 times PE right now, might only trade at 3 times the earnings estimate of a sophisticated portfolio manager that has done the work, meaning all 100 steps in that template I showed you. And I'll give you a couple examples. Number one, years ago when I worked in the hedge fund industry, I owned Amazon, and it was trading at way over 100 times this year's earnings and next year's earnings. And everybody would come up to me in the hedge fund industry and say, Chris, you're cray-cray for owning Amazon. That's a widowmaker because it trades at 100 times earnings. And I would say, no, it does not trade at 100 times earnings. It trades at 4 times my earnings estimates in 5 years. You got to think long-term always when investing and doing that. And because I'm a proud Canadian, I got to get my Wayne Gretzky prop here. I want you to think like Wayne Gretzky. He was successful not because he skated where the puck is, but rather because he skated to where the puck is going to be. And I want you to think the same way. I want you to invest in companies that people are going to like. How do you do that? You think long-term. And you value companies based on your earnings estimates in your financial model, which I teach from scratch. You value companies based on your earnings estimates in 3, 5, or 10 years. Always think long-term. And that's what Warren Buffett does too. And you got to think long-term. Like Warren Buffett, he once said that if you invested in Coca-Cola on day one during the IPO, you'd be down 50% 1 year later. But of course, if you held on in the very, very long run, you made a killing. You can't just look at earnings this year or next year. You got to think longer term, right? And skate to where the puck is going to be. And that way you'll sleep better at night, because you'll tell yourself this after you've done your research. You tell yourself this: I don't know the path, but I know the destination. Yeah. What I love to short companies when there's a change in focus from the management team. And the problem with traditional business school education is they don't teach you to analyze companies when it comes to looking at the management team. It's one of the most important things you look at. That's what a company is. And that's why my first step up here in the qualitative analysis is the management team. And I never invest in a company if the founder has quit, right? If the founder is still alive but quits, because bureaucracy sets in, or if the CEO or founder of a company, gets distracted. Like Elon Musk, for example, he wasn't the founder of Tesla, but he basically was there since the beginning. But Elon Musk, for example, his focus on Tesla was really off about 2 years ago when he bought Twitter, now called X. And you could see in the stock price, the stock dropped a lot, and the company's financial performance went down the tubes temporarily because he wasn't focused. He wasn't all in focused on the company. And whenever a founder of a company or a CEO would buy a sports team, when I worked in the hedge fund industry, we would look to short the stock. Obviously, we do a ton more research than just that. But when somebody is not all in, meaning 100% focused on execution, they can't compete longer term or near term. Yeah. So I always love starting by looking at the management team. Yeah. Okay. All right, next question here is, if you don't mind me asking, sure. So who are these trading gurus that we see each day? They act like they're making millions every day. Are they all scammers? For the most part, yes. I'm sure there's some ethical people. There are ethical gamblers as well that go to casinos. They might be good people, go to church and be ethical, but they lose money. I think it can destroy your health and your wealth. Don't do it. And there's a reason why we can't name successful day traders. because they don't exist. And the reason they don't exist is because you get fooled by randomness, which is a great book by Taleb. Read it, please. You get fooled by randomness because stocks go up or down in a limited, short amount of time for random reasons you can't forecast. Like, I don't know, university protests, or, I don't know, saber rattling between two countries, or geopolitical issues, or threats of war, or a random economic data point you couldn't forecast. Like, who knows where inflation's going? That's why stocks move up and down in a short amount of time. In fact, each month has 20 weekdays, meaning 20 days that the major stock markets are open. You can't forecast what's going to happen in a short amount of time. You can't. And the worst thing that can happen to you, or anybody that wants to day trade, is your first trade you make money. Because the similar scenario is the first time you go to a casino. Let's say that you bet in roulette, or you put a quarter in a slot machine and you win big. You think, oh my God, this is repeatable. It's like a drug. It's not. It's not. You have to think long-term always. And a lot of people think that, Chris, I don't get it. Don't hedge funds trade all day long? No. The best performing hedge funds in the long run are long-term focused. And so the hedge fund industry is basically pioneered by a brilliant man, God bless him, he passed away, named Julian Robertson. And he started Tiger, which is a great hedge fund in the 1980s. And I have a ton of friends who work for him. And he was very long-term focused, like 1 to 3 year bets at least. He wasn't a day trader. And out of Tiger came lots of Tiger Cubs, right? Meaning people that worked at Tiger started their own companies, like Maverick, Coatue, Viking, Lone Pine. There's tons of them. And they all have one thing in common. They're very, very long-term focused. It's impossible to be a day trader and make money longer term. And if anybody tells you otherwise, I'm going to get down. Let me get rid of this crap at the bottom here. Okay, hold on a second. I'm going to get down on my knees right now so you remember this. It's my coffee. Please, I'm begging all of you. Please, 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 don't day trade. It will all end badly. I promise you it will. Don't do it. And if somebody out there is trying to scam you with a get-rich-quick thing, it's not going to work. Okay? There's a reason like Warren Buffett is long-term focused. And it's so much easier to invest if you're long-term focused as well. Again, you'll sleep better at night. Let me show you something here. Okay. Let's go back. Let's take a look at the S&P 500 historically. Okay. So let's go here, Yahoo Finance, hit Mark. And let's look at my favorite ticker, which is VOO. And this is my favorite investment because the last company on the planet to go bankrupt ever would be the US government. All right, so let's go here. Yeah, that should do. Okay, I'll show this to you right here. All right, so this is the S&P between 2012 and 2024, right? It's a 5-bagger, 100 to 500 bucks roughly. Okay, imagine if you tried to day trade right there. I think the flash crash was background here in 11. And here you try to day trade and you're like, oh my God, it's the end of the world because of COVID. Stocks are going to zero. And the price of oil at this point, by the way, was at negative $30, the future price of oil. And I can go there if you want me to explain that. But you try to day trade and you lose your shirt. And you pay more in taxes, by the way, if you make money on short-term stuff, because governments try to force us all to be rightly so longer-term focused. You pay less in capital gains tax if you own stuff for more than a year. But if you just held on, it's a 5-bagger. And this is a frickin' index. Day trading doesn't work. Yeah. And when you come up with your investment ideas using that template I provide you with, and by the way, I'll never tell you what to buy. I'll teach you how to fish eat for a lifetime instead of giving you a fish eat for a day. But whenever you come up with your investment thesis, think long-term and try to see if you can come up with 5x5s. What does that mean? That means a 500% return within 5 years. Will you be able to do it? It's hard. Maybe you're only a little bit right. It's a 200% upside in 5 years. But that's how hedge funds think, right? Hedge funds' performance every year comes down to a handful of ideas where they did tons and tons and tons of research on, like that 100-step research process I showed you. That's how they make a killing. They don't day trade at all. And if you have any friends that are considering quitting their job to go into day trading, please, please have them set up a call with me, okay? Go to my website, HarounMBA.com. At the bottom, there's a link. Just set up a call and I'll convince them not to. Yeah. It'll destroy everything about you. I promise you. And I'm very passionate about this because I care, and because I have 1.5 million students in every country, and a lot of my students want to quit their job and day trade. It doesn't work. Yeah, that's why we can't name any successful day traders ever. They don't exist. Yeah. Okay. Holy, that was a long question. You're like, Chris, I asked you a yes or no question. You gave me an encyclopedia. Yeah. All right, next question is from Scalaro, who wrote, hey, Chris, hey, would you suggest to people who'd like to get their feet wet in the stock market to buy fractional shares? Yeah, no, I would, you mean partial shares of companies that have a high price. I would probably start off with ETFs, and I'll show you how to get started with that. Okay, so we go to a website here, a free website called etfdb.com. That's etfdatabase.com. And what you can do is you can look at 5,000 different ETFs here for free to express a theme, right? So say, for example, you want to invest, I don't know, you want exposure to Brazil, okay? And by the way, Brazil is so big. Check this out. This is cray-cray. Brazil is so big that the north part of Brazil is closer to Canada than it is the southern part. And the east coast of Brazil is closer to Africa than the western part. But if you wanted to, you could look to invest in ETFs in Brazil. Okay. Now, when you do this, when you look at ETFs, you always want to look at volume and the holdings as well to make sure it's diversified, and also the fees. So let me look at another idea here. So let's scroll down. Say you're bullish about lithium. Okay. So you go here, and I'm going to show you the coolest ticker ever. LIT. My kids say lit. I don't know if that's still a thing. But you click here, and you can do your research on this as well. You can even look at say you're bullish on lithium. You're like, God, I want to invest in lithium companies. Well, look at the holdings of an ETF that expresses the theme of lithium and do research on these. Now, when you invest in ETF, and I'll show you here in Yahoo Finance, you want to make sure that the fees are low and that it's very liquid. I'll explain liquidity as well. Okay, so this here is an ETF, meaning exchange traded fund that represents the S&P 500. So the first thing you look at is the expense rate. Okay, this number is not 100% accurate, but it's close enough for government work. So what this means is for every $100 you invest in this ETF, you're only paying 4 pennies per year in fees. That's nothing. And don't invest in mutual funds. They're a scam because there's so many hidden fees, and you pay way more in taxes on mutual funds, and they underperform ETFs. Then you look next at the average volume. Okay, and you want to make sure that you never buy more than 10% of the average volume. So if you're looking at an ETF that only trades, I don't know, 100 shares per day, then the most you can buy are 10 shares. And the reason I say that is because illiquid stocks own you in a down market and not vice versa, right? So you make sure it's very, very liquid. That's a good place to start. Okay. All right. Good to see you. Skin Bell. That's Marin wrote hi, and we're building the school in Nigeria in honor of her mother. And I interviewed Marin as well not that long ago, and here's one of her products here. So she has this great company called Skin Bell, where she makes skin products. You can check it out at skin-bell, that's BELLE.com. Yeah. Great to see you. Okay. All right. Next question is, can you explain how real estate and value investing can make us money? And how come most of the fund managers cannot beat the market? Yeah, sure. Let me answer that in reverse order. So a lot of fund managers, they chase performance into year end because they're paid based on how much they outperform an index by. And that's called alpha, right? So let's say the S&P is up 10% one year. And a fund manager that works at Fidelity knows they're only going to get paid if they outperform that, right? And if they're up 11%, that means they generated 1% or 100 basis points in alpha. What a lot of fund managers do is towards the end of the year, they chase performance, right? And whenever you try to trade or invest in a short amount of time, as Renvir asked before, like even on a 3-month basis, quite often you can't outperform. And ETFs is just a better way to go, because ETF, the fees are much, much lower. Yeah. Mutual funds are a scam. Please don't ever buy them. Buy ETFs instead. Okay. Your next question here was, how can real estate and value investing make us money? Yeah, let me talk about value investing first. So there's two classes of investors. Okay. There's usually growth investors, people that like to buy expensive stuff that's growing quickly. And then there's value investors like Warren Buffett who like to buy cheap stuff that's usually not growing as quickly. Now, you're either a growth investor or a value investor and not in between, right? Statistically, most people are, and there's exceptions, but most people are growth investors or value investors. Don't ever buy a company that is transitioning from growth to value. Now, every big company eventually becomes a value investment because big companies can't grow in the long run given the law of large numbers. Like the U.S. economy will never have GDP growth more than a couple percent. It's just big. So every company goes from growth eventually to value. And that transition can take a decade. Never, ever, 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 ever buy a stock if it's not growth or value. Because if it's in the middle, right, it's in what I call investment purgatory. It can take a decade to transfer over from growth to value. And while it's in transition and it's not growing as quickly anymore, growth investors don't want to buy it because they're like, hey man, you're not growing anymore. And value investors don't want to buy it because they're like, hey man, you're not cheap enough yet. So it can take literally a decade for that company to transition over from growth to value. Now, what can expedite that process, the catalyst to speed it up, is if an activist investor like a Carl Icahn gets involved. And what they'll do, these activist investors like Carl Icahn, they'll buy a massive stake in the company. And if you buy a big stake in a company, you can usually get a board seat. Then he'll get on the board, he'll muscle out the management team and change the company so it becomes a value investment or both. Let me give you a quick example. So eBay, for many years, investors were so confused about eBay because growth investors love their PayPal department, right? They own PayPal. And value investors love the sleepy auction business, which threw off a lot of cash, and auction businesses are recession proof. But value investors hated the PayPal growth side, and growth investors hated the sleepy marketplace auction business that value investors loved. So in order to unlock shareholder value and make the stock go up big time, Carl Icahn stepped in and he bought a 30% stake in the company. And he muscled his way onto the board and forced out John Donahoe. Great guy, John. He used to work at Bain. Big guy. I shook his hand, met with him many times. And he forced out the management team. And he forced eBay to split into two companies. PayPal and the core eBay marketplace auction business. And both stocks went up big time. And that unlocked shareholder value. So the bottom line message here before I get to your question on real estate is only invest in companies if you're sure they're either growth or value. And obviously you have to do a ton more research. And never invest in a company that's stuck in no man's land unless an activist investor like Carl Icahn steps in. Now, in terms of real estate, so I'm working very hard right now on a comprehensive real estate elective that's going to be added to the MBA degree program. Okay, and you'll be able to access this in the last lecture of your curriculum. It's coming this fall. It's going to be exclusive to my MBA degree program. But when it comes to real estate, probably one of the best investments you can make is your own house. It's crucial. And if you don't buy, and it's hard, man, because for me, I lived in New York City and it was expensive, man. I couldn't afford my first place until, I think I was like 30 or 32 years old or something. It takes a while. But the earlier you buy, the better. And if you buy early, your net worth can be close to $40 million at one point in your lifetime. This is crazy what I'm about to show you. Ready? Watch this. Okay. So I'm going to go to a spreadsheet. Let's see if I can do this. Let me go to, I think it's Google Sheets. Here it is here. Okay, cool. All right. So let me go down here. Let's make sure that the setup is good. Okay, good. So let me go down here to real estate. Here it is here. Okay, good. Yeah. All right, watch this. If you spend, I'm going to make this up. Say you spend $2,500 a month in rent, okay? You rent for $2,500 a month over 50 years. And if you think the S&P 500 is going to be up, I don't know, 12 or 13% in the next 50 years, which I do think it's going to be because of AI, and I can go there if you want me to, then look at this. That's a little too much. Actually, screw it. I'm going to leave it there. If you saved $2,500 per month and you put it into the markets for 50 years, it's $147 million. It's ridiculous, I know. But the compound interest is off the charts. The future value of money is really impressive. Watch this here. If you go to Starbucks, right, every day and you spend $4, it should be called $4, right? Then over 50 years, that's $2 million. That's $2 million. If your spouse does it, and that's $4 million. Yeah. Speaking of Starbucks, which has had crappy earnings for many reasons. Yeah. Okay. All right. Okay, and Andre wrote, what are the differences between day trading and options trading? Yeah, well, the word trading is, yeah, be careful, be long-term focused. So options, the best way to think about using options if you want to, and there's a 30-hour elective in my MBA program on options, and anybody signed up, just go to FA44. That's Finance and Accounting Semester 4, Class 4. But options can really be thought of as insurance products. And the best way to explain it is this. So I have life insurance, okay, and I'm probably worth more dead than alive. But we pay a small amount of money, relatively speaking, every single month in case something bad happens to me. You know, if I pass away, it's a massive amount. That's how you should think about options as well. So options, it's kind of like portfolio insurance. It protects your portfolio. So let's say that you have a one stock portfolio, right, where you work at a tech company and 99.9% of your net worth is in that stock, and you can't sell that stock for some dumb reason, right? Maybe you're not vested yet. What you can do is you can buy a put, which is like a life insurance contract, so that if this stock you own goes down a lot, this goes up a lot. But the most you lose is this amount. Kind of like my life insurance, the most I lose is this amount here each month. That's how you should think about options. Now, what you can also do with options is you can buy leaps. Let me explain that. So after you do your research, your 100 steps of research, like I showed you in that template earlier in the call. And let's say you do a ton of research and you're like, dude, this stock I've done research on, I think it's a 5x5, meaning a 500% return in 5 years. Then what you can do is you can buy calls, right? Which is kind of the opposite of that insurance contract. A call is the opposite of a put. If you buy it, the most you lose is this, but if the stock goes up a lot, you make a fortune. You can buy what are called leaps, which means a call option, right? That's going to expire in 1 to 3 years. Yeah. But whatever you do, please, please, please do not underwrite options, meaning don't create them and don't sell them yourself. Because if you do that, you can lose way more than what you invested if you're randomly assigned. And I can go there if you guys want me to in this call. Okay. And then Jerome wrote, what's the difference between the VOO ETF, the S&P 500 ETF, made by Vanguard, my favorite firm on the planet? What's the difference between the VOO ETF and SPLG? I've never heard of SPLG. I'm assuming that the fees might be a little bit higher. Let's go there and check it out together. All right. So let's go over here. So finance.yahoo.com. And we know here from the VOO, and these numbers are a little bit off, as I mentioned earlier. But here, the expense rate is 0.04. So that means for every $100 you put in, you're paying 4 pennies in fees per year, which is nothing. Let's type the other one. And we know, by the way, this is very liquid, right? Yeah. Let's type the other one there, which is SPLG, SPLG. And let's see what this is here. Wow. It's got an even lower rate. If this is right. Now, I don't know if that number is right. I don't think it is. But what I would do is this. You can always go to read the prospectus of this ETF. And any company that lists a financial product, by law, has to issue a prospectus. This is the prospectus for Facebook when it went public back in 2012. I would go directly to the prospectus of this to see if that number is correct. If so, then it's probably a better investment than even the VOO. Yeah. And it's plenty liquid as well. Huh. Very cool. This is how I learn, man. When one teaches, two learn. Or one learns. Okay. Next up, Jan wrote, hi, Chris. I love your content. Thank you. And then you wrote, if mostly everyone uses the same valuation models, databases, and investment philosophy, how can one differentiate their investment thesis? Yeah. Well, I'll tell you one thing that all successful investors have in common. They're long-term focused. Most people are not. And that creates great volatility in stocks and opportunities for longer-term focused investors. Yeah. But when you talk about value versus growth or whatever investment philosophy you have, it's like religion. It gets contentious, man. Growth investors hate value investors and vice versa. Yeah. So you'll develop your own investment style over time. Most people, when they're younger, they start out as value investors because in school they teach you, buy low, sell high, and, invest in stocks with low PEs. It's not the right way to invest, though. Yeah. But I would just be very long-term focused. And the difference between finance and accounting is a science, okay, where it's backward looking. You have to be precise and accurate. Whereas finance is more of an art. You have to be comfortable with uncertainty. It's like you have a crystal ball and you're trying to forecast the future using financial models. You'll never be 100% accurate. You have to be comfortable with uncertainty, but you have to do the research. And the best way to do research, in my humble opinion, is to really analyze, the qualitative, quantitative, and your financial model stuff as well. And again, there's 730 questions I ask you here. And this is a safety net to ensure that you do thorough research on the company you're looking to potentially invest in. Yeah. Okay. All right. Okay, sorry about that. All right. Next up, Robert's family, and I hope you set up a revocable trust as well. Yeah. And by the way, for anybody out there, if you have kids, you got to set up a will and a trust as well. The easiest way to do it is go to LegalZoom.com. It costs you next to nothing. I'm not affiliated by anybody. I'll never be sponsored by anybody. I get offers all the time because I want to stay true and pure to you, my students. Yeah. LegalZoom.com. All right, so Roberts wrote, hey, Chris, I wish I saw this opportunity before throwing down $70,000 on the one I have for my own completed in-person MBA program. Oh, thank you. And then you wrote a question. If we have the MBA in one course on Udemy, how robust is that? Yeah, so that course on Udemy, it's 7.5 hours. My MBA degree program is hundreds and hundreds of hours. I think it might be close to 500 hours with Q&A now. It keeps growing with all the electives, and it's exclusively available on my website, all new. All recorded in 4K from multiple camera angles. It's rendered in 1080 now, but it's future-proofed. Yeah. Okay. And then Robert's family wrote, if you already have an MBA, so people tell me in my MBA program, they learn more in the first 30 days of my MBA program than they did in their entire MBA program they paid for themselves, right? And it's a fraction of the cost. Like it's ridiculous because a traditional MBA costs you, I had a briefcase full of money. It's over here. I was going to show you a prop, but whatever. A traditional MBA can cost you $100,000. And you don't learn the most important lessons, meaning they don't teach you how to sell. They don't teach you how to network. They don't teach you how to write a business plan. They don't teach you how to start a company. Ask anybody that graduated from MBA school. Do you know how to start a company? They don't. They don't teach you how to manage your own money either. They teach you how to manage other people's money. They don't teach you social media. All this stuff I teach you. And I've got a 30-day, 100% money back guarantee. Yeah. But I have a lot of students from top 10 MBA schools that have taken my program, and they always say they learn way more in the first 30 days at a fraction of the cost than they did the MBA from their traditional school. Yeah. And I'll never do accreditation because that'd be a disservice to all of you. I don't want a government tell me what I can and cannot teach. I don't want them putting their nose in my business and making me teach awful theoretical crap like supply and demand graphs that nobody ever uses. Yeah. And this is truly your MBA in your terms. You can take it on any device. You have lifetime access as well. Okay. And if you have questions about the MBA, you can always go here. There's a massive FAQ as well. Yeah. All right. Phil, how are you, man? Phil, Germany, wrote, hey, Chris, I think you said before that software has a higher margin than other products. Is that right? Can you elaborate? Yeah, absolutely. Yeah. So with software, you don't have inventory. right? And it doesn't cost you money to make it really after you've already created it, right? It's just like it doesn't cost you money to send an email. It's all virtual, right? So the cost of goods sold is basically nothing. And the gross margins for a lot of enterprise software companies like Oracle, SAP, etc., is well over 90%. Gross margin means sales minus the cost of goods sold. Unlike, say, and this is one of the case studies used in my MBA program. So Atari and the entire video game sector went belly up in the 1980s. And the reason it did was because in 1982, the movie E.T. came out, and then Atari created this game called E.T. And everybody's really excited about it. And Steven Spielberg, blessed it, even said, yeah, go for it. And it was so bad. It was the worst game ever. I remember my dad bought it for Christmas. I was so excited when I was 10. I was born in 72. I was so excited about it. But it was this E.T., you could barely make him out. And he's walking backwards. He can't walk. He can't turn around. Chasing these M&Ms or Reese's Pieces. It was so bad. And they made hundreds and hundreds of thousands of these, if not more. And that inventory destroyed the company. It destroyed the company. And the margins were massively negative, right? Unlike traditional enterprise software companies today, where you don't have to make things like this. So never invest and never start a company that makes a physical product unless you sell it first and then build it later. And that way you can use the cash flow to make this thing. And that's what Michael Dell pioneered with Dell Incorporated, which he started from his dorm room in Texas back in the 80s. Yeah. All right. And then Marin Koros wrote, hi, Chris. Thank you for mentioning the school in Kenya. We are honored. Yeah, thank you. Thank you. And God bless your father for securing the 10 acres too. Thank you. Okay. All right. And then Amr wrote, hey, Chris, how are you? Good to see you again. I'm always good. Thanks. And I hope you're doing well as well. Thank you. Yeah. And I'm getting 30,000 steps every single day in this office now with my treadmill. Dude, this is the best biohack ever. You guys got to get one of these things. It's like $250 on Amazon. And I walk at like I think it's 6 miles an hour all day long, right? And I slow it down sometimes too, but this puts me in a peak mental state and I can accomplish so much more doing this. I know it sounds crazy, but remember when you were younger, the first hour of studying every day, you get a lot done. And then at night, 10 hours of studying, you got nothing done. Well, if you exercise all day like this or a lot, every single hour, you're getting 10x the amount of work done. So that means a 100-hour day if you're working 10 hours. I swear by this biohack. It works. And I've got one of these cray desks that goes up and down. I want to show you the link to this thing because it keeps going on sale. It's the best investment, man. All right, let me go to my orders. Okay, and then I'm going to go to treadmill. And I've worn this thing out, so I bought 3 of them. Yeah. 2 or 3. Let's see here. 2. This one, yeah. Oh my God, the price keeps going down. Guys, trust me. Don't buy my MBA. Buy this. I'm telling you, this is the best investment ever. Put it, and you can put it under your couch as well. And if your spouse is worried, don't tell them. Just buy it, and then store it under the couch there. Yeah, it's. Oh my God, this no brainer. Please just buy it. In my MBA program, I teach you about biohacking as well, many other things, nutrition, and every Sunday I make 7 of these, as I mentioned to you guys before. It's got every antioxidant in the world in it, and I try to finish one of these every day. This is vodka, folks. Yeah. Okay. All right, next up. Oh my God, electronics on site. That's Eduardo. From Texas, and I haven't seen you in a couple of years, and you had a son who's a teenager who was number 3 in the country in Taekwondo. I remember you. Yeah, how are you, man? It's been a while. You wrote, hey, Chris, nice to see you again. I also want to build schools for poor people in the Andes in South America. God bless you. What investment, in your opinion, will in 6 months triple in value so I can use that for the project? Yeah, I don't know. I don't think it's possible. If you want to make a lot of money within 5 years, what I would do is use that template I showed you earlier today. Do a ton of research. And the way you know you have a good idea is if you complete that template. And if you start working on that template in the first, I don't know, like 20 questions you answer out of 730, you tell yourself, hey, maybe this is not a good investment anymore. Then quit and move on to the next one. But what I would do is I'd create a very detailed financial model, answer all 100 steps in that template as well. And then if you have a target price in a company that's, say, 500% higher in 5 years, which you can find, you won't be perfectly accurate. Maybe it's only up 200%, or maybe it goes up 700%. I don't know. But then you can consider maybe investing in leaps, meaning calls that expire in 1 to 3 years. Yeah. In 3 months, it's impossible. Don't let anybody tell you otherwise. Yeah. To make money. Yeah. Yeah. I mean, I could tell you how to make 2% guaranteed because you're in the United States. I'll show you. Here we go. All right. So what you can do is you can go here to treasurydirect.gov. Okay. And this only works if you're in the United States. Okay. And as the name implies, you buy directly from the Treasury. And the reason you probably haven't seen this anywhere is because no companies are allowed to resell this. Like the JP Morgans, Goldman Sachs of the world, they can't advertise this. Okay. So this here is a Series I savings bond. Okay. And this was just updated yesterday, actually. Interesting. Yeah. All right. So this here actually went down. So this means that you will make 4.3% if you invest in this. Okay. That's on an annual basis. And the rates change every 6 months. The next time they'll change is going to be October 31st. Okay. And you will never lose money on this. This is directly from the US government. If we're in a deflationary environment, you still won't lose money. But if inflation gets worse, then this will go up. Yeah. And I think the most you can invest is 10K or something. Just read through the FAQs here. Again, go to treasurydirect.gov. Yeah. And that was actually, I think it was 9% and change a couple of years ago when I invested in it. Yeah. But again, that's just over 6 months. Yeah. All right. All right. Next up, Ritwick wrote, hey, Chris, hey, I would like to seek your advice, sure, regarding a career choice. I'm considering 2 options, data scientist and a tech or AI analyst. Which one should I choose? Yeah. Yeah. Before ever choosing a career path, before figuring out how, ask yourself why. Why do you want that? And think long term as well. And I hope it involves something along the lines of, I'm passionate about this. Follow your heart, and this will follow as well. Yeah. Yeah. But if it were me, I'd probably be a data scientist. Because I really do think, and look, I teach Python courses and Excel courses and programming in my MBA program. But I really do agree with the founder of NVIDIA with his comment that AI could replace programming jobs, but never data analytics type jobs, in my humble opinion. Yeah. Okay. All right. Next up, Diffin Eduardo wrote, in terms of technical analysis, what do you think about astrology and numerology, moon planet conspiracy theories? Yeah, you put a smiley face there. Yeah, I don't really think of it. Yeah. But if you have a thesis, please share. Yeah. But I have these here from the eclipse. I don't know if you guys saw this, the eclipse. And you can now tell your children, it is now safe to stare at the sun again. Okay. No. That was a joke. In case the YouTube police are watching me. Okay. Because freedom of speech is not a YouTube thing. It's a government thing. Okay. And then next question is, Chris, what do you think about Walmart exiting their pharmaceutical market? I didn't realize that. I think that's a moronic decision. That would be just as dumb as Costco getting out of the gas market. Because a lot of people like to go to Costco, fill up their gas on the cheap, and then shop. Yeah. Yeah, I don't understand why Walmart would do that. That doesn't make sense to me. Especially since Amazon has gotten into it recently. Yeah. And think about how many older people, like me, visit Walmart to pick up their meds. Yeah. And while you're there, you buy other stuff. Yeah. Okay. Next question is, Renvir wrote, how do people time their shorts? Yeah. So sometimes it can be catalyst driven. A catalyst means an event coming up, right? So for example, I'll talk about positive catalysts. Years ago, in early 2012, I invested in Lionsgate Film, ticker LGF. And a guy I work with, really good guy, Brian Carter, was his ideas. Smart guy, good guy, miss him. But Brian's thesis on Lionsgate Film was that there's going to be 3 catalysts coming up, which is the Hunger Game movies. You know, every year or every other year, there'd be a new catalyst, meaning a reason to invest, right? And you always want to invest in stocks that people are going to like, and that's what a catalyst does, right? Like, say, for example, I don't know, you own Take-Two, TTWO, because you think that, you know, the catalyst of GTA 6 coming out next year is going to get people really interested. Only with a short, the catalyst is the reason for it to go down. Yeah. Okay. With shorts, sometimes it's hard to come up with a catalyst. It might be that a company is cooking the books and they have material accounting issues, kind of like Enron, ticker ENE used to be. The ticker, same thing with WorldCom and Dynegy and many others. Yeah. And I'm working on an elective right now with one of my platinum students, Gary Russian, to create a financial analysis elective for you guys that will help you understand forensic accounting. Yeah. Okay. Next up, Marin wrote, Chris, what is your opinion on this? A lot of countries in Africa regarding floating their currencies and leaving it for the market to correct it. Is this good? And what are the good, bad, and ugly effects? Yeah. Well, if you have a fixed currency, a fixed exchange rate relative to another currency where you do a lot of business with, I mean, a country you do business with, then that can really help you in terms of good visibility, in terms of customers, revenue, GDP, et cetera. I'll give you an example. So Jamaica, Barbados, a lot of Caribbean countries, their currencies, like the Bajan dollar, for example, is pegged to the US dollar. And it makes sense because, you know, the biggest industry in Barbados is tourism, and there's a lot of American tourists, right? So it makes sense to have that fixed or pegged exchange rate. Now, if a country doesn't do the bulk of its business with another country like the United States, then maybe a floating instrument makes more sense. And the good thing about a floating currency is that you can change interest rates to stimulate the economy or cool it down. And so what that means is this. You know, if inflation is too high, then you can raise interest rates. And you raise interest rates to cool down the economy, because if inflation gets too high, you don't have an economy. Alternatively, if the economy is not doing well, you can cut interest rates, right, to increase consumer demand. Yeah, that's what I would say. And for a country like Nigeria, which is the subject of a vlog I'm publishing tomorrow, it makes sense sometimes to devalue a currency so you can get more international investors. But it's a double-edged sword. Let me explain. So let's say that Nigeria wanted to get more Chinese investors, you know, buying its products. Well, what it could do is it could cut interest rates, which makes the Nigerian naira go down relative to the Chinese renminbi or Chinese yuan. That means that more Chinese companies, hypothetically speaking, would want to invest and build out infrastructure in Nigeria. But it's a double-edged sword because it doesn't always work, because if you're a consumer in Nigeria, that means now that your currency went down value, that every other product from every other country that's imported is more expensive to you. Yeah. Hopefully that makes sense. And if you have follow-up questions, let me know, please. Yeah. The ugliest effect, though, is if you have hedge fund raiders, like the hedge fund mafia, like George Soros and others, coming after you to force you to float that currency. And if you want, just do a search on my YouTube channel on FX, or watch my vlog tomorrow. I can explain it in a lot of detail there as well. Yeah. Okay. All right. Next up, Phil Mon wrote, hey, Chris, thank you for continuing to give back. Thank you. And thank you for being here too. I love my job. I don't have a job, I have a passion. You wrote, is this good? Okay, and then you wrote here, I'm also a fellow Londoner. Oh, cool. Cheers. I love your thoughts on pursuing entrepreneurship versus continuing the corporate career pursuit, given the, yeah, thank you. And when you say London, you mean London, Ontario. That's where I was born. Yeah, and London, England was named after London, Ontario. You guys know that, right? Yeah. Okay. Then you wrote, given the existing backdrop regarding AI growth, I'm trying to think long term here. Yeah. I think that I am so bullish on AI. And I'm really bullish on the S&P 500. I think the average return of the S&P 500 over the next decade or two is going to be 15% per year at least, on average. I think that AI is going to help companies to materially cut expenses, which drops right to the bottom line. Yeah. And I'm certainly using it a lot in my company. Yeah. All right, next up, Sam wrote, I get it, day trading doesn't work. What about swing trades? Let's say there's a catalyst for a company coming up. Yeah. If you notice an arbitrage opportunity, shorter term investments can work if you do the research. And by shorter term, I mean 6 months. For example, a lot of hedge funds, they have a department called event driven. And what event driven does is it's shorter term focused. What they'll do is if one company announces they want to buy another company, they'll go short the company making the acquisition, and they'll go long the underlying company, so that eventually the arbitrage opportunity closes. Let me explain that with an example. Okay. So let's say Coca-Cola. Coca-Cola owns Dasani water already. Okay. So let's say Coca-Cola wants to buy Dasani water. Say the deal never happened. And Coca-Cola and Dasani water is trading at $7 a share. And Coca-Cola offers $10 to buy Dasani water. What usually happens is this. Dasani water does not jump right up to $10 yet. It usually goes up to $9.50, for example. Okay. The reason it doesn't go all the way up to $10, 2 reasons. Number one, some investors think that the government won't approve the deal. And number 2, because of the time value of money. You can put money in the bank and make money in 6 months, which is when the deal closes in this hypothetical example. So Coke is trying to buy Dasani, let's say. And Dasani was at $7, now it's at $9.50. And Coke said, we want to buy you for $10. Well, what event-driven hedge funds can do is if they do a ton of research, okay, and if they think that deal is going to go through, and a lot of their employees are lawyers that used to work at the Department of Justice. If they think the deal is going to go through, what that event-driven fund will do as a short-term 6-month trade is they'll short Coca-Cola, the company making the acquisition, and they'll go long Dasani, the company being acquired. And because they think the deal will be approved. And then in 6 months, that spread will close. Now, if they're wrong and the deal doesn't get approved, it's like they're in trouble. But they use options to maybe hedge those positions for a nightmare scenario. Yeah. So they work, yeah. And the only reason you'd see Dasani go above $10 is if, I don't know, we thought PepsiCo or some other firm, beverages company, might put a competing offer at a higher price. Yeah. But they do a ton of research on it, just a ton. Yeah. Yeah. Similar to that spreadsheet I created for you guys. Yeah. Okay. And then Vil wrote, I love your stuff. Thank you. Manas, how are you? So Manas has been with me since the early days. Yeah. Before episode 100, I think. Yeah. Manas is based in India. He's got fantastic AI courses on Udemy as well. Manas wrote, good morning, my dear mentor, Chris. Please. Hope all is super well. I'm going to miss today. I'll watch the replay later. Too tired to watch live as I was shooting for something. Then he wrote, sorry that Justin Trudeau took a girl from you. Now I have to explain that. Yeah, thank you. And thank you for all the emojis. God bless you more, brother. Okay. Now I got to explain what happened with Justin Trudeau. Okay. So Justin Trudeau, Prime Minister of Canada, make Trudeau a drama teacher again is the red hat people are wearing these days. Sorry. I don't care. I said it. It's funny. So it's 1994. I'm at McGill University in Montreal. And there's a girl that is so gorgeous that nobody talks to her, right? Like on campus. She's so out of everybody's league. And it's the 4th year. And there's a charity event at the front of on McGill campus by the McClellan Library. And she's there. And I'm like, you know what, man? I'm just going to do it. Hey, how are you? I started talking to her. And after 5 minutes, she's still talking to me. I'm like, am I awake? Then 30 minutes go by and we're still talking. And she's laughing at my jokes. My jokes are awful. You guys know that. I've had dad humor even before I was a dad. She's laughing at my jokes. And I'm like, okay, Chris, you have to ask for her number now. You got to do it. All of a sudden, this dude walks up. And he's got long hair. He looks like Jim Morrison, right? And the second she sees him, she's like, oh. And I'm there, right? I'm like, what just happened there? I just got Heisman. What is happening? And his jokes are even worse than mine. Not saying a lot. And she's laughing at his jokes. And anyway, I don't know what to do, man. So I go, hi, I'm Chris Haroun to him. Like I'm nobody. Right? And he goes, Justin Trudeau. I got Heisman by a Kennedy. I can't compete with a Kennedy. No, he was a nice guy about it, though. Yeah. Trudeau 1, Haroun 0. Yeah. Okay. All right. Next up, Mark, how are you? Mark goes by Satones. He always writes in caps, and I always want him to because he reminds me of my grandfather. And Grandpa, I know you weren't yelling at me in those emails when you typed in caps. Yeah. Okay. So Mark from Michigan wrote, hey, brother, shout out to the Global MBA gang. Great to see you. Thank you for the emojis. You wrote, what do you think about China? About CZ Changpeng Zhao being taken down for money laundering. I hear BRICS is being backed by gold. What do you think? I don't know anything about that. Yeah. Anything about that. Is that a news event today? Scared to even look. Okay, let me go here. You wrote Changpeng money laundering. Oh, Binance. Oh, yeah. I did hear about this. I didn't know his name. Yeah. Dude, I'm telling you, most cryptos are a scam. It's crazy. Keep your money in crypto ETFs if you're going to invest in ETFs from reputable companies or put them in a cold storage wallet. Yeah, I did hear about that. That's crazy. We really need regulation, man. Like, I believe in small government. Like, I was a big Ronald Reagan fan as a kid. Not saying I'm a Republican or a Democrat. It all depends who the candidate is. But I believe yeah. But we do need a little bit more government oversight when it comes to cryptocurrencies. I think cryptos should be regulated by the SEC. Yeah, that's crazy. Don't ever keep your money in a hot wallet. Always keep it in a cold storage wallet, meaning your crypto, sorry. I mean, like a Ledger Nano, like one of these things that takes 8 million years to set up. Yeah. That's why you can't have more than 5% of your investments ever in cryptocurrency, and no more than 0.5% either. Thank you for sharing that. Yeah. All right, next question is, doesn't Robert Kyosoki say that buying real estate is to rent it out and buying a house is a liability? Yeah, I don't agree with him. Yeah. Especially in the United States, because you get to write off the interest on your mortgage. Yeah. And I think it's fiscally irresponsible in the United States to pay off your entire mortgage because you get the write-off. Yeah. In terms of investment properties, I own a bunch. I was down in Florida 2 weeks ago, kicking the tires in 2 different houses that I'm looking to buy. I put in an offer. I took a video of it as well. It's going to be part of the real estate elective that's coming out this fall in my MBA degree program. Yeah. But the best investment I think you can make is your house. Because think about how much money you'd be saving instead of wasting money on rent that goes nowhere. Yeah. And one of my favorite things to do now with my cash flow is to invest in real estate and then rent out places with Airbnb. or to students. So I own a bunch of houses close to Western University in London, Ontario, Canada. And I rent it out to students because, you know, universities is kind of recession proof. But I also look at Airbnb closely. So what I recommend that everybody do is before you buy your next house to live in, see if there's an external door that you can build, or it might be built in, for another room you can rent out, which will pay your mortgage. Yeah. And what I spend a lot of time doing also is looking at what Airbnb prices are in certain houses before I put offers on them. Yeah. Now, when I do that for houses in Florida or in Canada, I have a management company that helps me, and I pay like 10% fee, whatever, but they take care of everything. Yeah. Yeah. My grandpa used to say, buy land, Chrissy, they don't make it anymore. Yeah. Yeah. As much as I love Kyosoki, I don't agree with him on that. Yeah. Okay. Next question is, can you do a quick review of Expediter stock? Is this a good launch? I can't, because I can't do a quick review on any stock because I've got 100 steps and 730 questions I have to look at. Yeah. Okay. And then Mateo, who's wrote, hi Chris, hope everything's fine. Can't wait for Monday. Awesome. That's right. Mateo's joining my MBA program. It starts this Monday. Check it out, folks, if you want to, at that website there. Platinum is sold out, but we do have gold positions available if you want. Yeah. Okay. XY squared wrote, hey Chris, when the VIX is under 20, should investors sell stocks? No. The only time I would use the VIX as an indicator is when to buy stocks if the VIX is above 70 or 80, right? Which is very rare. Now, the VIX was launched in 1990 by the CBOE, and it went above 70 on two different occasions. One was the fall of 2008, when we were within bank machines of being within 24 hours not working. And the other was in Q1 and Q2 of 2020. Yeah. And I can go to more detail on that if you guys want me to. Yeah. On what VIX means and all that stuff. Okay. Mateo wrote, I got a treadmill and I get at least 15,000 steps every day. Now I'm thinking to buy an adjustable desk so I can lift it up and walk while being at the PC. You should do it, man. It's a great investment. So I've got this desk that goes up and down. I really am embarrassed to show you what's on this. Yeah, there's a lot of, it's like 8 feet wide. It's huge. And I thought I'd be neater because of it, but I have more stuff on it. But it's great, especially for your back, man. Because once you lose your back, you can't get it back. You want to make sure, and my posture is not that great, and I'm trying to fix it. But like I always type, I always put the desk up this high when I'm typing it as well. Otherwise, you get back pains. Yeah. Okay. All right. And then Mohsen, first time I see you on the call. I hope you join us again. You wrote, I'm a rising sophomore at Arizona State. Nice to meet you, Mohsen. And I'm trying to break into Wall Street. Currently, I'm interning at a portfolio company of Apex Partners. Nice. Doing a roll-up strategy. My GPA is quite low, though. Yeah. Yeah. So you're going to find, Mohsen, that relationships are more important than product knowledge. And the people in your class that have the highest GPAs are not going to be the most successful. The people that are going to be the most successful are the ones that are well balanced. Good enough GPA, maybe 3. And they also know how to interact with people. Yeah. And a lot of people in your class that, have 4.0s or whatever it is, they're going to join the workforce and they're going to keep their head down like they have their entire lives and work really, really hard. And then one day they're going to look up and they're going to get frustrated. They're like, why is it that other people are getting promoted faster than me? Being able to socialize is an important thing. It's hard to be balanced and have a good social life if you have a 4.0. Yeah. Right. But the thing that will make you most successful is your ability to network. The fact you have that job at an Apex portfolio company is incredible. Just network like crazy, leveraging a LinkedIn to get informational meetings. And you can join my MBA program if you want. We start on Monday. And I will walk through walls to help you and make sure that you can change careers, etc. Yeah. Let me give you one tip on how to do better on tests. because I've written lots of tests as a teacher here, and I've failed a lot of tests too myself. Whenever you take an exam, and what I'm about to tell you all will materially increase your grades. Whenever you read a multiple choice question, I want you to think like a lawyer, okay? And I want you to think, okay, if I was in a court of law, could I contest this answer? For example, the question is this. What color is this video game cartridge? And the answers are A, it's always black, B, it's sometimes yellow, C, it's never black, or D, none of the above. Okay, now we're a lawyer and we're thinking of the answers. Let's go through A. It's always black? No, I can find an exception to that. If I go like this, maybe it's kind of whitish with or brown if there's a brown light over there or something. So A is wrong. Okay. B, it's sometimes yellow. Well, yeah, I could see that if I have a yellow light. And yeah, it could be. B is probably right. C, it's never black. Well, it can be black, especially if I turn the lights down low, it looks black. So that one's wrong. And D, none of the above. That's wrong. So the answer is B. B. B because it's sometimes yellow. So I want you to look at wishy-washy answers as being correct. Now, I've perfected this to a science to the extent that I can write multiple choice exams without reading the question and many times get over 50%. I'm not saying don't study, but I'm just saying think like a lawyer. And this is the only time you should think like a lawyer. I don't like lawyers. Unless you're a civil rights lawyer, then I love you. Think like a lawyer when you answer exams. Yeah. Answer questions. Yeah. Okay. All right. Oh, one more thing I want to tell you is well. And I told my kids this. After every exam you get back in school, right? Especially if they're essay related ones where it's gray, it can be. I want you to go and contest that grade, but have a good argument, right? And be nice about it as well. And if you do that, on average, your grades will go up between 5 and 10% on average. Because professors are like, leave me alone. I want to do my research. I don't want to teach. Okay, I'll give you an increase in grade. Go away. Yeah. Not exactly like that, but you know what I mean. Yeah. Okay. Okay. Or you can do this. Go visit with your professor and you say this. How should I think about preparing for this exam? Right? So you're not leading them to tell you exactly what's on it, but they might tell you what to really focus on. Yeah. And don't join a fraternity where you get old exams in a cabinet in the basement. Don't do that. Ever. Yeah. Because teachers are never lazy. They always make brand new exams every time. Yeah. Okay. One more thing I got to throw out there. Okay. If you have a teacher that tells you, don't use Wikipedia for research, screw that. You should. But here's what you do. You go to the sources of that Wikipedia page and go to those sources there. So still use Wikipedia. Okay. All right. And Mohsen, if you're really worried about your grades, so like if you're in second year, as long as you do better in third and fourth year, and you can easily explain why you didn't do as well in the first year, that's fine. Yeah. But don't think your life's over because of grades. Certainly not. Yeah. All right. Next up, Richwick wrote, where can I find that personal finance Excel that you showed earlier in the live stream? Yeah, it's one of the templates available in my MBA program. So go to this website here to join the MBA program. I provide you with a ton of templates to help you work smarter, not harder. Yeah. Okay. And then Benny wrote, you should have slapped him on behalf of all future generations of Canadians. Yeah. I did a vlog yesterday that's going to drop tomorrow where I pretended I was the Bank of Canada and I explained how bonds worked as well. And I went back in time to the spring of 1945 to talk about how governments issue bonds to pay for wars and stuff as well. This makes me proud, man. Yeah. Yeah. All right. All right, my hair didn't get messed up either. Well, a little bit. All right. Okay. Oh, speaking of back issues as well, I think Mateo wrote he wanted to get one of these stand-up desks. I wear this as well to try to fix my posture. So I'll put this on, and sometimes I'll wear it under my black shirt as well. You get on Amazon, it's like $10 or something. That can kind of help. And I've got 3 teenage boys, and I always, when they're having their cereal, make sure they, yeah. So they don't look like me. Okay. But they look like the milkman for some reason. Anybody say that anymore, the milkman? Or is that like, I'm dating myself? Okay. All right. And then Nicholas Noriega wrote, yes, I'd love to hear more about the VIX. Yeah, let me explain it. This is fun. All right. All right. So let me go over here. All right. And let's go to finance.yahoo.com. Okay. Mark Zuckerberg. Have you ever seen him interviewed? Every now and then he goes, huh. All right. So I'm going to go here to the VIX. All right. So the VIX was founded and created and floated by the Chicago Board of Exchange, CBOE, okay, back in 1990. Okay, let me go advanced chart. Let me hide all this propaganda. And let me go to maximum. Every chart tells a story. Okay, good. Great. All right. So the VIX is a measure of volatility. And what it measures is how volatile stocks are going to be in the S&P 500 in the next 30 days. What that means is this. It looks at the volatility of options, okay, like calls and puts. And if volatility goes up, then that means there's more fear out there, right? Makes sense. So if volatility is really, 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 really high, then there's maximum fear out there. So every chart tells a story, okay? So here we are, 1990, it was launched. And then here, Gulf War 1, December of 1990, it was around the attack in Iraq by the United States. So fear jumped up to 30 here, which is not that bad. It's hidden under my head there, but it's about 30. Okay. Then it subsided. Oh, the roaring 90s, the internet, yada, yada, yada. Everyone was bullish. Latin American debt crisis right here, a little bit of a spike. Things were great. Then we saw a massive spike right here with the Asian financial crisis. They called it the Asian flu. And around this time, this is when George Soros shorted the Thai baht and made a lot of money. Then things got better. And then here we had an emergency rate cut. I was at Goldman Sachs here. I remember when Greenspan cut rates just to calm the markets. So things got better. And then right here, the dot-com bubble blew up, a little bit of fear, and then a lot more fear here for obvious reasons because of 9/11. And then there were a lot of companies going bankrupt, awful accounting here with WorldCom and Enron, et cetera. Then things got a lot better, right? And the VIX went down, and my face is covering it, I think. Oh, no, it's not. But the VIX went down to a low number. Everything's going great. And then the financial crisis right here, the fall of 2008, when we were within 24 hours, bank machine's not working. And the VIX, actually, you can't see it, but it spiked to above 70, right? And that's when you buy stocks, when everybody's freaking out, okay? And when the VIX spikes to above 70 again, I promise you it will one day, you're going to think to yourself, okay, Chris, who never really tells us to buy stocks, but he said if the VIX goes above 70, no matter what you buy, you know, I think he's crazy. And I think I'm crazy if I buy now. That's when you buy. Because think about it, it's all about supply and demand. The demand for stocks will go to zero, meaning a lot of people won't want to invest anymore. That's when you buy. If you buy a stock that everybody else already loves and owns, there's not that many incremental investors to push it higher. And I remember it was around this time where Warren Buffett said the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Be a contrarian and watch your net worth take off. All right. So that was then, and then things subsided, things got better. The VIX went down a lot. Then we had the flash crash right here, which is just a one-off event. Things got better. And then over here, this was under Trump, and I'm not going to get political on people here, but I'll just state a fact that usually what happens is the more left-wing a government is, the worse the markets do. It is what it is. I'm not going to get a political statement here. And then, of course, right here, we had COVID and things got so crazy here. And you can't see it, but intraday, the VIX actually spiked to above 80, the highest ever. And everybody was selling everything then, panic selling. That's when you buy. And I remember back then, the price of oil went to negative 20 or 30 bucks. How the hell can oil be negative? Well, what happened was people were freaking out and selling the future price of all commodities. So oil prices were down negative 20 or 30 bucks at one point because the naysayers, the skeptics were saying, well, you know what, man? It costs you $600,000 every day to keep an oil tanker afloat in the Baltic Sea. Therefore, the price of oil should be negative. It got crazy. And the most unemotional investors on the planet made a killing. Even Elon Musk, right? And he's unemotional, and that's one of the reasons he's successful. He backed up the truck and bought a lot of Tesla shares right here. And you can always go to Tesla, look at the Form 4s on sec.gov to see that. And I can go there if you want me to, just let me know. And then eventually he sold those shares. I think it was in late 2021. The same shares he bought and made a killing. Yeah. But anyway, that's the VIX in a nutshell. Yeah. Yeah, there's not much fear right now. All right. Alrighty. Okay. Next up, Phil wrote, I own my home, but currently I can't afford other property. Is buying a REIT an alternative to get into real estate? Not really. I mean, with a REIT, it probably won't go up in price too much, but you'll get the dividend, right? Because by law, real estate investment trust, which is kind of like a mutual fund or ETF, collection of real estate investments, by law, they have to pay out 90% of their operating profits in form of a dividend. Real estate, I think, is better because you get capital appreciation. You can do more stuff with it too. You can make dividends forever by renting it out, so to speak. Yeah. It won't be up. You won't make money in a straight line, right? The real estate cycles are long. It's feast or famine. But if you buy now, then 20 years from now, you'll be up a lot. Yeah. Again, don't worry about the path. Focus on the destination. Yeah, and when it comes to REITs and dividends yielding stocks, be really careful if you see a really high dividend, like 25%, because it's not sustainable. And the market probably thinks that they won't be able to make future dividend payments, or as a one-time special dividend. Always go right to the source, meaning the investment offering memorandum or the prospectus, to learn more at sec.gov, for example. Yeah. All right, and I do have to wrap up this call in a minute or so. And for those of you in my Silver MBA program, I will see you at 10 a.m. That's in 12 minutes. Go to the first lecture of your curriculum for the 1-hour weekly Zoom call. And for those of you in my Gold or Platinum MBA program, you can also join that. Just use the same link, Zoom link as usual. And for Gold and Platinum students, I also have a dedicated call for all of you. That's 2 hours from 11:20 until 1:20 p.m. Yeah, so that means 3 hours of one-on-ones, or pardon me, of Zoom Q&A with my MBA students. Again, go here to learn more. Next MBA starts on May 6th. That's going to be the last one this year. And this is the last MBA program I'm offering where you're automatically grandfathered as a gold student into any future class. This will be the last time I do that. Yeah. Okay. All right. And then Mohsen wrote, thanks, Chris. You said my name well, too. Thank you. I have a lot of friends named Mohsen. Yeah. Tons of friends. And my dad's best friend growing up, my dad's from Egypt, was his name was Mohsen, but the guy I know is Persian, really good guy, and Mohsen Mozami. He actually mentored me a lot when I worked in venture capital. One of my favorite people. Yeah. Mohsen Mozami, here he is here. Yeah, great guy. Yeah. And he's a rock star investor, really good human being too. I know his son's a good dude as well. But Mohsen actually, when I was buying my house, he said, Chris, if you don't feel uncomfortable when you're buying a house, you're not buying big enough house. I remember that. Really good guy. Yeah, good dude with a big heart. All right, next up. Okay, Benny wrote, I'm 35 years old. Is it too late to take the MBA course program? Which tier would you recommend? No, it's not too late. We have people in their 20s and people in their 70s. Yeah, we've had thousands of people graduate and take it. It's for everybody. Yeah. I would check out Gold. Yeah. Platinum is sold out. But you can sign up for Gold if you want. Or what you can do is sign up for Gold and let me know you want to be on the wait list for Platinum. And if somebody drops, then yeah. Okay. All right. Next question is, thank you for your answer. Maybe I didn't explain Kiyosaki's philosophy correctly, but I got my answer that you make it a cash giving asset and the mortgage doesn't come out of your pocket. Yeah. I'm not sure what he meant by that. Yeah. But I respect Kiyosaki. Yeah. All right. All right, next question is, I just bought your course on options, thank you. And I'm on the first quiz, really excited for the comprehensive lessons. By the way, do you teach what to invest in that course as well? I never tell my students what to buy. I always teach you how to invest. Yeah. Thank you for that. Okay. Next question is, we're using the strangle or straddle strategy for leaps. Is that a great way for profits? It depends if you want to hedge yourself, right? So for leaps, usually what I do is I do a lot of due diligence on a stock. And if I see like 500% upside within 5 years, then I'll just buy out of the money calls that are between 1 and 3 years expiration date from today for a low amount. And I don't really worry about hedging the downside. Yeah. And the reason why I don't have to really worry about hedging my portfolio that way is because, well, I don't run a hedge fund anymore. And also because I'm very diversified. I never have more than 5% of capital in any one investment idea. Yeah. Okay. And then Muslim wrote, hey, Chris, really appreciate the great answer you gave. Insider trading on exams here. I hope you don't mind. Follow-up question. Of course, man. I'm always here for you. Yeah. You wrote, where do you see the high finance career path going? Meaning investment banking, I'm sorry. I misread that. Private equity, hedge funds, and venture capital. Yeah. I mean, I think they'll be around forever. Because investment banking means origination. You originate the product, right? I'm sure AI will help to expedite the processes as well. But origination, meaning investment banking, will always exist. Private equity will always exist as well because the markets are not efficient. Don't let anybody tell you otherwise. Hedge funds, they'll still exist, but not as many will be around just because a lot of people are making more money with ETFs, which are outperforming. But there will always be high net worth investors that will want to preserve capital. And so hedge funds, their primary focus is capital preservation, right? And then capital appreciation after that. And so rich people that invest, or very wealthy people, I should say, that invest in hedge funds, quite often their number one focus is they want to preserve all the money they made, right? And that's why before they invest in a hedge fund, they usually say stuff like, what was your performance in Q3 and Q4 of 2008? How did you do in Q1 of 2020? How did you do in Q3, Q4 of 2001? Just to see how they manage volatility. And also, how did you do in August of 2007? I can go there if you want me to. Yeah. And venture capital will always exist as long as interest rates are low. Yeah. So when interest rates go up a lot, people don't invest in riskier asset classes like VC. And that's why in the early 80s, when interest rates were about 20%, it's crazy then, man. Hardly any companies were born because everybody just wanted to invest in bonds because it was risk-free. Yeah. Okay. All right. And I got time for one or two more questions. You're most welcome, Mohsen. All right. So Mark wrote, how does Russia's economy grow 3.5% more when they have 16,000 sanctions on them? Yeah. And you wrote, congrats on the new election with Gary. Yeah. Thank you. Gary's great. So first of all, how do we really know they're growing that much? And think of it from a game theory perspective. If Putin were to say that, oh, our economy is contracting, there could be riots or revolts. I mean, the only way I could quantify why their economy would not be contracting materially is because the price of oil went up. Yeah. Right. And two of the biggest profit drivers to that country are Lukoil and Gazprom. Yeah. Yeah. I will never invest in a Russian company. Yeah. The accounting, it's a scam. Yeah. Based on my experience looking at Lukoil and Gazprom years ago. Yeah. All right. And there's a bunch more questions, but what I'm going to do is for the additional questions, what you can do is just ask me next week, please. Or if you're in my gold or silver or platinum program, I'll see you during office hours today. Yeah. All right, guys. God bless you all. And again, don't forget to join me next week because next week I'm going to be interviewing Ilya Strebilev, who is right here, about his new book and about venture capital as well. So be ready to ask questions about VC, private equity, and all that great stuff. He's a good guy. He's been a professor at Stanford for 8 million years. He's tenured and all that great stuff. Really, really good dude. Really good guy as well. Also, if you want to join my MBA program, again, this is the last MBA program of this year. You can go to this website here. And this is the last time I'm ever going to allow people that purchase gold or platinum, or gold, I should say, platinum sold out. This is the last time people that purchase gold will be grandfathered into future gold programs for free. So go to day1notoneday.com, and then you can just read about this stuff here. Yeah. And then lastly, the last shameless plug. Well, please click the like and subscribe. The like button helps me and all that stuff. Lastly, check out my book. If you want to support me, just check it out. You can get it on Amazon. It's called Finance Essentials for Managers. I'm at that age now where I have to look away like this. My dad used to look at his BlackBerry like this. And I was like, no, Dad, close to your face. You can read it. It's like, no, you don't understand. Yeah. So Finance Essentials for Managers. Yeah. Okay, guys. God bless y'all, and thank you. This was fun. For those of you in my Silver MBA program, I'll see you in a couple of minutes. Go to the first lecture of your curriculum to get the link for this week's 1 hour Zoom call. Thanks, guys. Take care.